What's up, team? Last video for the next 2 weeks. Going to be heading off to Mexico. Hope you guys are having a safe trading environment. It's been very choppy. I'm going to walk through some of the scenarios that we should be looking for in the next couple of weeks up until I'm back. Follow me on Instagram. If you're not following on Instagram, I am going to touch base on Instagram. Just talk about some things that's fit traders. Make sure you're not following all the frauds that are out there. As soon as you follow me, if you haven't already, you're probably going to get some frauds trying to follow you and ask you to trade in Bitcoin and stuff like that. Ignore those posts. I don't really follow anybody on Instagram, so that's how you can make sure it is me. Shoot me a DM. Anyways, listen, I'm going to walk you through a couple of cycles in the market and things that we've observed together. If you've been following along, the YouTube channel started in 2018. Rick's Trade started at the beginning of 2018. If you've been following me way back when we were trading in the cannabis space since like 2016, I'm going to walk you through some of my learnings and understanding of market cycles. And that way you can really understand where my coaching comes from. How do I talk about these things that I always talk about over and over in the videos? Because one of the things that I'm noticing is that the market goes through a 2-month chop period, a correction, and most traders are blowing up. Like they're actually just blowing up and they can't take it anymore. And it's just a 2-month correction. It's not even a long period of like a bear market, right? So you have to understand that you have to be able to withstand these types of markets. And if you follow the teachings along the way, which is always staying 40-60, being selective, making sure you're always protecting your higher low, taking A+ setups, not trying to force it every day, trying to scalp every day. If you follow that along the way, then you would understand, okay, this is my period to relax. This is not a patio season. And I want to show you some of the things we've gone through together. And pre-Rick's Trades, people that were trading with me during the cannabis time until up until I started Rick's Trades, I was in another community, really, participating and helping coach traders along the way. We started in CGC right around this time, right around this environment, and this is when the cannabis space was really booming. I'm going to walk you through what happened in here. So if you look at this run in here, this is a massive run. We're talking about running from $3 up to $5.50, almost 100% move. Like this is where people are starting to get that euphoric mindset and not understanding that, these things don't last, right? These euphoric cycles, they don't last. They get really choppy. Maybe it's a little bit of a blow up top. It's an inside bar. Okay, we're still trading within the mother bar, 5 days, and boom, then we broke out of that range. And this is why I tell you, and we always talk about, watch these inside bars, watch the mother bar. Do we trade through the break or do we come back and lose it and then we're going to come back down into this zone, right? Because we would look at this and say, look at this zone that established it, we're going to break us. So you would have known, looking at that was a triangle. Boom, is that a blow off top? Well, it looks like it, but the demand is here. The demand was really evident in this space. Think about what GME did when GME was getting candlesticks like this. It seems like it's a top, but then you just get an inside bar. Then you trade higher. What is this about, right? This right in here is really about protecting your higher low. Because if you don't protect your higher low in here and then you're just buying up in the top, you're not recognizing the chart's too far extended, it's too far away from the 80 MA, you give back too much, you're not ready, you're not prepared mentally to be able to take advantage of the next time this chart gives you an opportunity. Look what happened on this name here, right? So if you protected your higher low, you understood that it was time to take some profits, you really traded around the core, you set yourself up in a really good mindset, understanding you're not going to buy the bottom and sell the top over and over, but keeping your perspective in check, protecting your higher low, staying 40-60, respecting the chart, how far away it gets from the 80 MA, how far outside of the upper Bollinger Band we are. And then look what happens. Look at the run in here. Now, look at this. What do you think's going to happen in here? What do you think's going to happen here? Look at these volume candlesticks accelerating to the top as the chart blows up and you get the biggest volume. What's going to happen, guys? You know what's going to happen in here. It's going to be a volume climax, right? Let me just slow this down a little bit in here. So what happens on the next candlestick? What do you call that, guys? You know what this is. It's a volume climax. You didn't need me to have pressed play on the next candlestick. You could already start to see it was about to happen. This is where my teachings come from. This is where my personal lessons learned in blood. I learned a lot of lessons in blood that day. Yeah. Celebrating before you exit. I was buying a $99 suit, Calvin Klein suit at the Bay on this day. While I was doing that at the Bay, Sherwood Gardens, in just outside of Toronto in Etobicoke, in a zone that doesn't really have good reception. If anybody watching these videos ever been to the Bay at Sherwood Gardens in the basement, you know the reception is not very good. I couldn't place my stop loss. This was happening. I was going to work that day. I was a branch manager at BMO. 11 a.m. I was going to start work that day. And this candlestick started to happen before that. So while I was casually walking in, I wasn't a full-time trader. I had a lot of money in here. But while I was, driving the Sherway, I had people calling me, people texting me, euphoric. I stopped in the parking lot and I was trying to get this stop loss in because I knew this is it. This is going to be a blow off top. Didn't work. Didn't happen. I ended up being able to get out in that day at around that $13 mark, which was for weed. I think for weed, the top was 17. Weed CGC, same ticker. And here it went up to 14, but at that price at that time, I can't remember exactly what it was for weed. I think it was 17 and change. Ended up being able to get out 13, 14, $4 off of the top. It was a Climax scenario. And that's where my lessons come from really understanding how volume climaxes work. Too much to the upside. What happens when you have a big run to the upside? You're going to get a big push down. What happens when you get a big push down? You're going to have a huge bounce back to the upside. You see this? What happens after you get that big bounce back to the upside? Right? Then you see, do you set up a higher low, continuation, or do you fall lower? Let's look at what happened in here. I'm just going to speed this up a little bit more now. Right? We went through some form of a little bit of a triangle, right? And then what happened? Chop. Look at this chop. So if you think you're running through this sideways consolidation before a breakout, look how much this ran, okay? Now, I was a part of this. Now, this is where you make huge money, right? Look at this. It ran 379%. That's where you make big money. When you have a stock, something that you're really aware of, you have conviction and you're going to hold, that's where the big money is made. If you're just trading SPXL and TQQQ, SQQQ, you're not really going to make that much big money. There's money to be made, and if you have a huge account size, there's money to be made. But it's when really you have a stock, a conviction play that you know you can hold. It's very similar to what we had done in some of the growth stocks last year, what we had done in some of the big tech like a Tesla, like an Apple, NVDA. That's where the big money is. Last year, our big stock too, from the Canadian perspective, was Score. Score ran up those same amount of percentages. When we don't have those individual stocks, those high conviction plays, personally, I don't have one right now. Now, you could have gone back and said, well, you could have done some oil stocks, you could have done some of those plays in energy. Yes, there would have been this opportunity, but for me, I wasn't there. I wasn't in that space. I wasn't zoning in. I was still zoning in on tech. To a fault, sometimes you're going to stay in a sector a little bit too late, but you understand where your cycles are and where's your opportunity to make money. Look at this huge run, 400%. What's going to happen after a major run to the upside, a major drop? What is going to happen? Ladies and gentlemen, you're going to go through a long period of chop. When you go through a long period of chop, you have two choices. One, blow up your account, right? Because you want to trade every day, because you think the next 1,000% option trade or the next 200% move in the stock is coming. Or you realize that this is going to be a period of chop and I need to relax. Maybe some small scalp trades, less swinging, because it's not going to give you huge ranges. And look what happened after this huge run. We get a long period. So let's just say now, let's just start from the top of this. Okay, that's where volatility started to die down. What is that? That is 2 months, 61 days. Okay, is it even over? Let's check out how long it went. Okay, finally. A couple weeks later, or a week later, we started to get some momentum back to the upside. But look at this, 67 days, trading within a range, very tight. Big run up, big drop. Big drop, big bounce. After those two, big run up, big drop, big bounce. After those three scenarios take place, what do you have? You have a long period of consolidation. Now, what's most likely going to happen in here when you have all this resistance in the chart? What happens when you create these major supply zones in a chart? This is major supply. You know how much sellers are in here, how much sellers are in here. People are dying to break even. This gambler's dream to break even. You need to get yourself out of that mindset of trying to break even, okay? You need to think about professional, protecting your higher low, having proper risk to rewards, not FOMOing in on everything, worried that you're going to miss the bottom, worried about, always trying to sell the top. Understanding you're participating in the market cycle. You're not going to get the top, you're not going to get the bottom. But if you could get a nice piece in between both moves, you're going to be doing very well. So what happens in here? We came up, we had a nice run. We ran right into the supply zone in here. Look at this. Look at those two candlesticks in there. Look where this candlestick topped out at. Come on, trading view. What did we get in here, right? Look at that. Just within this range. You see what I'm saying? Bearish engulfing candlestick at a resistance level. What do you think is going to happen here, ladies and gentlemen? What do you think is going to happen? Long period of consolidation. Now, how different is this currently from what we're watching right now? In anything, we have a run up, we run into a supply zone, we are unable to break it, we get stuffed. What do? We go through a long period of consolidation. What should you do during a long period of consolidation? If it's not impulsive to the downside, guess what? There's not too much money being made either direction. When you're trapped between zones, there's not too much money being made in either direction. You know why there's not a lot of money being made? Because when you're trapped between two zones, it's always, is it ready to break out now? Or is it ready to drop now? In the middle, in that chop, everybody loses. Everybody loses. Your job is not to. Because if you can kind of recognize what you should expect from here, and you should because you're watching my videos, I'm giving you and myself good guidance on what should happen in here. You can't always think about making the most amount of money as possible. It's not possible, okay? It is not possible. You need to think about, how can I protect my money as much as possible? And then when market conditions and the stock or the index or whatever I'm tracking is right, it's my time, it's patio season, then I could crush it. Like guys that are in oil right now, in energy, they are crushing it right now. Guys that are finally making some money on gold. Gold, how long gold trading sideways doing nothing? It's just been dead. Now they're making some money. As long as they're holding, right? Because if you're trying to go in and out, it's going to become very difficult. Look at this. From our top to this low, if we just go and we run across in here, now let's go look at the time frame in here. Let's just go to our top and to our low. How long so far? We are trading within those two candlesticks 167 days later. This is going to go a little bit further, right? Just a little bit further. We dropped, but it was quickly bought. Why was it bought? Because it's the demand zone. Let's see. Did we go a little bit further down? Okay, still in the same range. Still in the same range. Look at this. How many? Okay, a little bit of a fake out. There's some supports down in here. That's fine. What do we got? Let's drag this out a little bit more. How many days are we trading in this range? 240 days trading in this range. So momentum started to come back up. Where do you think we're going in here? Okay, think about, look at this. 308 days later. Look at this. Okay. Now, you see this momentum really starting to show up? Boom, 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 right? We finally broke out. Momentum started to show up. We didn't come back up and break to a new high till 355 days later from that top. In that 355 day period, I helped coach, mentor, watched a lot of people that blew up. They blew up. And when the time came, when the run came, they couldn't play it. Why? They didn't trust it. They lost too much. They got caught up. They tried to make too much in a big chop zone. How many people right now in FinTwit, everywhere, are you watching doing the exact same thing as we go through this long period of consolidation? Forcing, doing too much, not allowing the charts to tell us it is go time. Look at this. This thing took 355 days before it made a new high. If you had missed all of this in here, you didn't trust it, and you just played it from this point, if you started to just get excited from this point on in here, from this breakout in here, right? If we think about just that move, let's start thinking what happened in here. Came back, back tested, boom, broke out again. Okay, look at the back test in here. Back test. This is why I always talk about revisiting major breakouts. Revisit the zone. Big supply and demand zones. Revisiting and then getting big impulsive moves out of here. Look at this run. If you had waited perfectly I mean, not just waiting till that day, just being able to keep your higher low in check, keep your mindset in check, allow the market to tell you it is go time, because you're not going to be perfect, right? You're not going to be perfect. Like you think in here it's going, then it starts consolidating, right? You think about, what does this consolidating do? It's backtesting in here, starts to push, starts to get impulsive move, a little bit of a triangle here. Look at these moves. Like there's money to be made. And then look at this, 164% up into that range. But let's just say you played it on that backtest in there. Now you're at 354%. This is not options, ladies and gentlemen. This is common shares, right? Common shares. And now we don't have something like this that I'm aware of. Like personally, I don't have anything right now that I think is going to be doing this, but I'm just talking about the cycles in the market. Now the percentages might not be the same, but I'm going to take you through the journey, a little bit more of the journey. So what happened in here? What happens after you have a big run? You have a big drop. What happens after you have a big drop? You get a big bounce. Now, is that the big bounce in there? Let's see. Did we bounce a little bit higher before we came back? Okay, so I guess this would have been it. That would have been it. It was a huge hit. It ended up coming. But what happens? Long period of consolidation. So after this 354% run, how long are we consolidating after this range? Think about the cycles in the market. So here, now we came back up. We double topped essentially back into that range, and we've been trading sideways for 97 days. And there's been a long period of consolidation. There's going to be more. Okay, now we came back up to that range. Now you know what's happening here, ladies and gentlemen. Okay, you know what's happening in here. Okay, you know. Tell me the words. What are the words? We're weakening the zone. We're coming back up. We weakened it. We weakened it. We weakened it, right? Keep on coming up. Keep on coming up. Retesting this supply zone in here, right? We're retest. Just like down in here, right? Just like down in there. Support. Trading zone to zone. Zone to zone. Now we start to see this big volume starting to come in, right? Big volume, increasing volume. Ooh, fake out, trap. Now, what happened there? You got a breakout. Next candlestick, look at the volume. So, yeah, okay, you got some good information. Big candlesticks coming. It looks like it's going to break out. What do? You adapt. You recognize. Why do I always talk about the volume? Watch the volume coming in. Watch the volume going out. Spicy going in. Spicy going out. You know what I mean? That's the way it goes. Now, what happened? Double top, right? Fake out, breakout. Long period of consolidation. What's changed? What's changed in here? Forget about the ticker. Like, this, I'm living this one because I went through this, and a lot of people that have been with me for a long time went through me with this, is that all we're doing is exactly what every chart does. Zone to zone. So, fake out, breakout. Volume comes in. Have you seen this before? Have you seen it recently? Has it happened in the market? Okay, so now what? What happened in here? How long are we trading between these two ranges before we went on a breakout? Let's look at the long period of consolidation. Now, these periods of consolidation are so long, they're so big. Okay, we went 222 days because the ranges are massive. We're talking about 300% moves multiple times. Massive moves cause massive consolidation, cause massive bounces, cause massive sideways zone to zone trading. That's just the way it is. Now you can see in here, we back tested this little gap fill in here, didn't quite fill it, came back down, then they had some news, and the news caused it to explode, right? Again, in this range, you have two options. One, blow up, lose all your money, or two, trade wisely, understand you're going to go through a long period of consolidation, wait for A+ setups, participate, understand, and zone to zone. Now, something's changed. Something drastically changed in here. Just like any market, any sector, any ticker, there's going to be a period where the environment changes. Because one, you've gone through a long enough period of accumulation. Two, news comes in and affects the chart, and the chart's ready to go. If the chart has already done what it wanted to do, the news is going to help escalate the move. It's going to help further drive the move. But if you give me big bull news at the end of a bull cycle, right, then that's it. It's going to be a sell the news event. If you give me big bull news at the bottom of a bear cycle, it's going to be a short squeeze, it's going to be a trap, it's going to be a run. After a major period of consolidation, that's your fuel to say all the accumulation has happened and here we go. So if you don't get cut up in those 222 days of consolidation, you had a massive run. Now this one was less time frame, right? So if we think about off of the bottom to our top, we still had 130%. We had a double top in there, but there's still a good trade in here. Ladies and gentlemen, I decided to create Rick's trades, did my own thing in this period in here. That was the first big bounce day. Boom, massive trade that day. This is when this is the candlestick that Schumer hit the 7-figure trade. If anybody wants to visualize what that candlestick looked like, that was the candlestick on that day, which was September 14, 2018. And then double top, triple top, fake out, breakout, boom, dropped. Look what happened in this stock from that range on. Now, I started Rick's trades at that time, and then I started Fit, I think right in here, somewhere in here. Fit started right in there. Let's look at what happened in here. So let's look at what happened when I started Fit. So the drawdown, and most of everybody that was watching me at that time was really focused on cannabis space. So if you think about from our top, no, my mistake. I started Rick's trades in here, and then Fit started in December of 2018, which was here. So if you think about Rick's trades from that period, what was the drawdown before we got into Fit? The drawdown was 57%. We were primarily focused on a space where the leading name in the space was down 57%. The first member at Fit ever is Daryl D-Man. First member I've ever trained online that was not, local, nearby. I was doing classes at that time. Trained from Kelowna. We went on, met this person. We did not Zoom. What was the other one that was very popular at the time? Oh man, I'm forgetting it. Skype. Okay, Skype. We went on Skype. D-Man is still here. D-Man has survived this entire time. Now think about what's happened during these times. 57% drawdown. Let's continue to go on and see what we got in here. Let's look at the next drawdown. What happened on this next drawdown? So we're going to have a double top. Was that the double top right there? Essentially, that might have been it. Yep, that was it there. So let's look at what happened from there. Look at this, come back up into that zone. Doesn't quite get up to the top of that candlestick, but it gets into that candlestick. Then what happened in here? Look at this drawdown, 58%. Okay, 58%. And then we decided to say, I can't remember exactly which point it was in here, but that's it. No more focusing on cannabis stocks because they're dead, right? And then eventually there was another run when everything ran with GameStop. But look at this 58% drop, another 58% drop, long periods of consolidation, dead environment. Fit, what did we do? We adapted, we thrived, we moved, and we excelled in other spaces. But we survived this type of market behavior. Let's go look at what ES has done since we started Fit. We started Fit 2018 financial, the rate hike. What's the title for that? Anyways, rate hikes when Powell came out and freaked out the market. And then Fit started, I think, somewhere right around here, December, right around in here. We started. What was the first thing that happened when we started Fit? Basically, that range in the market dropped 16%. It did so in about 29 days, in 30 months. This is when we first started Fit. What happened? Huge drop, huge run. Okay, huge run, big period of consolidation, massive run in the market. What else did we see in Fit? We saw the Corona crash happen. Boom. Look at that, right? 36% in 33 days. Biggest drop we're likely going to see in, who knows what's going to happen right now because of this conflict that's happening. What did we do? What did D-Man do? D-Man's still here. D-Man survived. What am I doing? Been doing YouTube videos almost every single day. Good times and bad times, you will find me here. Unless I'm on vacation smoking a cohiba in Mexico. I know cohiba is from Cuba, but I still plan on smoking them. So what happened in here? Big run. big drop. What was the drop in here? Now, 10%, what did individual stocks do at that time? They were significant. Here we go. We got 11%. What did we do? Another 10% drop. Big run. Massive run. And we're using the index, so the runs are going to be a little bit more structured than what we're seeing in individual names like we're seeing in ARK and stuff. Choppiness. Look at this. Look at this choppy environment. Nobody liked this environment. You date back to May of 2021. Did you like that environment? You didn't like that environment. I thought it was selling May and go away. And here we go. What happened when we ran into here? September 21, right? This drawdown in September. How long did this drawdown take? It's not as dramatic, of course, as we have now, but not everything needs to be so dramatic. Before we started to run again, took about 41 days, 6%. Choppiness in here. We had a nice run, choppiness, and then the fake out. And from that fake out now, we've had a big period of chop. We've had a big drop, right? 21 days, we had a big bounce. That's a massive bounce in the market. We know this. Massive bounce, another massive drop because these political events that we're having in here, but another, 10% drop. So you get a 12% drop, an 8% bounce, another 10, 11% drop from our double top in here. Yeah, it's been difficult. It's been hard. But if you follow my cycle, you follow my teachings, my learnings, what I've been telling you throughout the process, protecting your higher lows, keep your mindset in check, understanding there's not time to play options. Everyone else, what options you take? What options? Not time to play options. Okay. Yes, you might see an opportunity every now and then, and they might work every now and then. But the more option trades you put on in a choppy environment, the more you're going to get cut up, the more you're going to get burnt out, the more you're going to lose over time. Yes, you will catch a good trade. Yes, you'll catch a good win. And those good wins in bad market environments, which is essentially maybe a little bit of a bad behavior that you might be doing, is going to create this sense of false security in your mind that, oh, it worked last week, so I should go and do it again. You're paying jacked up premiums with the VIX trading over 30, and because it worked for you last week, it gives you this false sense of security. It's going to work again. Boom, you start taking a loss. You give some back. You stop using the lessons that I've given you, protecting your high low, making sure you're trading very selective right now, not over trading, not using big size, not swinging too much. You burn out. And you just don't recognize it's just a part of the market cycle. We will always go through these cycles. I use CGC as an example. I showed you very long periods, very huge amounts of percentage up and down. You don't need to call the top. You don't need to call the bottom. You don't need to do any of those things. But just understand where we are in the market cycle. This is why I don't worry about the bottom. I don't worry about the top. I worry about when does the environment tell me it's good and we're ready to go for it. And that's it. Because I know at that point, that's where I'm going to make my money. Anybody that is a serious bull trader, over time, as long as they stick with it, they use good discipline, they use good behaviors, they will survive and they will thrive. That's just the way it goes. The market is built to go up. It always goes up. Yes, at some point, we're going to go through a significant bear market. And what do you do when you're in a significant bear market? It's just like when we're in a significant bull market. You make sure you're protecting your high low. You make sure you're being very selective. You make sure you understand what the market environment is. And when you don't know what the market environment is, which basically most people don't right now. Most people don't. Myself included. I'm going to show you what I'm seeing, but myself included. If this Russia-Ukraine thing ends up being much bigger, then we'll know why we're more than 20% off the highs in the NASDAQ. At this point, it wasn't just inflation. It wasn't just supply chains inflation. It was factoring in that this was going to happen and this was going to be big. And this is why you see all these reports that smart money is getting out, retail is buying right now. That's the agenda everybody wants to push right now. Yeah, same thing happened at the bottom of March 2020. That retail is dumb and retail is going to get smoked and we're going to go revisit those lows. I get it. And this time it might not happen in favor of retail. Yeah, for sure. But I don't care. I don't care what they're saying. I don't care what the news is saying. I don't care what, here's the agenda. Stupid money is only buying right now. Only retail is buying right now. I don't care. And by the way, if Sherv said this in his video today, it's nothing to do with Sherv because I haven't watched that video. So it's, don't, like, you know what I mean? Like, oh, man, I'm talking shit about Sherv's video. I don't know if he mentioned that. But personally, I still wouldn't care. Like, I wouldn't care. I would look at this and say, what does the chart tell me? Where are we in this market cycle? Okay? Does this tell me that the bottom is in, that the top is in? Am I convinced either way? I'm not sure. Like, I would look at this and I would say, okay, let me see what we got here. Boom. Okay, so, you know, we got enough legs down that I think we should be looking for a little bit more upside. And that's how I look at it. I would say, you know, from here, you know, the volume off of the lows, of course, new volume will change all that. Significant. I know there was a bullish divergence in here. I know we've gone through a long period in time already, plus price and consolidation. I think we're ready to hang out. I think we're ready to hang out. And when we're ready to hang out, I think we can have a move back to the upside and, you know, not go straight to a new high and then chop around, consolidate. But in that environment, there's going to provide opportunities to make good trades. Your problem, yours, your neighbors, your friends, everybody you're trading with, problem is that you think you're going to get rich every single day. You think you're going to come in here every single day and boom, there's 1,000% option trader. You log into Twitter and you got the guy with the paper trade account. It's a paper trade, is that what you call it? Paper trade account, and, you know, calling out 1,000 trades, and then boom, that one stuck. That one was 1,000%. So they pumped the shit out of it on Twitter and social media, and that's it, right? Boom, easy money. This is how it works. Bullshit. That's not the way it works, man. The market goes through big cycles, and it's hard to time every pivot on every movement of the market cycle. It's so hard. You could have an idea, and then you need the confirmation, and then you see the market environment, and you see the trends, the trades, the names all starting to get the run. That's where the big money is. If you're coming in every day and you're trying to spitball every move on the stock, it's super hard. And that's why you're burning out. That's why you're taking too many losses. That's why you've completely forgotten about your higher low. So you know what happens when you forget about your higher low? Money becomes like less of an object. It's like, man, I had 100K, now I'm at 50. Well, you know, what's 50 now? Like, boom. Let's lotto 25K on these earnings. Now the 50 has become 30. And then you're like, man, this is a big drawdown, because you got to a point where the 100 to the 70, you stopped protecting your higher low. You started to really panic and you got some anxiety and you were trying to force things. Then it became 50 and then you become like immune. Like, it's like, whatever. Doesn't mean anything anymore. And then the 50 becomes 30, right? 25, 20. And then you capitulate. And then you're like, wow. Because at some point you stopped using any discipline. You stopped using any real logical sense of what money means, the value of that money. It's a lot easier to turn 50 to 100 than it is to turn 25 into 100. Okay? 25, one double up is what? 50. Right? 50, one double up is what? 100. Pretty simple. It's a lot easier to turn 50 into 100 than it is 25. When I took the loss in the 50K challenge, yeah, who cares, man? It sucked. Our Russell went on a breakout. Those stocks were looking pretty good, and that was it. That was the top. It's hard to call a top. But at that point, while we were consolidating, what did I do? I came on, told you guys, gotta sell it, man. Gotta protect. Gotta protect this 42, 41K. Gotta just protect it. Because if we don't, what's gonna happen? Might become 20. And this market environment, haven't made any trades in that account since. Been using my trading account to go in and out of some trades because nothing's a long hold, right? What happened? It was the smartest thing ever did. The smartest thing I could have done for that challenge. Protect the money. Wait for the market environment to change. The market environment hasn't changed. Hasn't changed at all. It's been in a downtrend ever since. There's been some good bounces along the way. But when those bounces are happening, you know they're just bounces. So you're going to go in, participate, you know, find a couple of names that you're going to use one of your accounts, right? Take advantage of it, and then wait, be patient. This is it, guys. This is like, people come on and they watch these YouTube videos, they go on Twitter, they go all in into this mindset that they want to be a trader, but they don't understand anything in life worth doing that has any value, monetary, personal reward, whatever value you're looking for, is going to be hard work. It's not going to be easy. Okay, this is not you go buy a lottery ticket and you win. You know, this is why most people, they don't win the lottery, right? The chances are very slim. You want to make real money. You want to make a difference in your life, in your family's life, and those around you. You got to put in the work. And the work is not just, let me go look at a chart and go look for the next trade and force yourself. Understand that the work comes with protecting yourself, protecting your mindset, protecting your accounts, keeping it balanced and understanding, does this market environment tell me I'm going to get rich right now? Do you see any GameStops out there? Shiba coins? Is anything like that happening? That's not happening right now. Okay? Tesla's not exploding. Apple's not exploding. You can go catch some energy stuff that's running really hot. Do with some options. Yes, there's opportunities there. But not in that environment, it just isn't here. So if the environment's not here, why are you trying to force that environment? Don't force it. Let this thing dwindle out. Let everybody chase their tail, calling bottoms, calling tops, doing this, acting like heroes. Let them do it. Let that cycle, that vicious cycle happen. And you sit back and you relax and pick your spots. But most importantly, protect your mindset. Chill out. Okay, you gave back more than your higher low. Too bad. What are you going to do now? You're going to blow up what you have? Or are you going to say, hello, 50,000 that I have now? Maybe I started with 20. Maybe I started with 30. Maybe I started with 53. Whatever is there. That's the money you have now. That's the money you need to work with. That money that's there today, at this moment. Not about the money you had 2 months ago, last February when ARC topped. You still chasing that money? You're going to be chasing things the rest of your life. Still chasing that girl at the bar, on Instagram, trying to slide into her DMs, or the boy. Either one. Whatever is your cup of tea, that's good with me. You're always chasing. Why don't you let them chase you? Make yourself worth being chased. Make yourself that trader that says, nah, I'm not interested in here. I'll wait. I'll wait for this thing to tell me it's go time. And when it's go time, I'm going to kill it. Because I kept myself in check. You could turn the 50 back into whatever you want to turn it into. It's up to you. The charts will come. The trades will come. The opportunities will all be there. They will. They always are. 365 days later, they're back. I showed you that on that CGC chart. And that was just one example. There's millions of names that you're tracking, that you're trading, that's going to provide this. I'm not coming on these weekend videos anymore and dropping a watch list. When's the last time I did a watch list? There's no sense in doing a watch list. Shit's garbage right now. If I didn't trade oil and energy and those things, ain't nothing happening. Might be a trade every now and then. Try and help people. A little bit of a scalp. Do a little bit of a scalp. Take advantage of a small move. Saw one last week in AMD. Beginning of the year, we had some runs. We had a runner forward. Whatever. There's been some trades. NVDA gave us a little bit of a run. There's been some trades. Nothing too exciting. 100%. There will be a lot of things that get exciting at some point. Might need to draw down first. Might need to go a little bit lower. Maybe they need to capitulate down to the bottom. Maybe we need to come back in here, hit this trend line, back test this trend line, back at 390, 385, something like that. That's okay. If that happens, embrace it. Be excited. Understand that while that's happening, huge oversold balance trades will happen. You could grab short trades. Short trades are going to pay you. Maybe you're trading energy. Maybe energy is exploding to 200. Whatever is your cup of tea, hit it, stick with it, let it develop, let the trade come to you. And if you're in already and it's really working, don't let anybody shake you out that trade. Stick with it. You won't sell at the top. But you can make a lot of money along the way. What I'm anticipating here in this market really has not changed. Okay, just that's it. I'm over all that, right? Next 2 weeks, I come back. I want to hear good things from you. I want to know that you've done very well. 2 weeks, we could potentially still be in the same range. Maybe. It's going to depend on what happens with these conflicts that we have out there. But what do we got? What do we got going on in here? Guess where we're trading? We're trading still within this range. Another violation here. Didn't get a breakout. We actually got a fake out. Fake outs are deadly. Fake outs are scary because I just showed you a bunch of fake outs from the CGC days. What happens on a fake out? You drop down, you go into a long period of consolidation. It's not a good sign. I do not like to see fake outs. That makes me be a lot less bullish. Oh, no. Okay, now it's kind of like either just jump in bearish, but if it's going to be bearish sideways, screw it. If it's going to get impulsive down, okay, there's some money to be made in impulsive moves to the downside. Otherwise, sit tight, relax. Not much has happened. We had a fake out breakout. We knew there was risk of that fake out breakout. This is the zone to zone. That's all I'm thinking. I'm, showing you one zone to another, right? Because between those two zones, we could be there for a very long period of time. Showed you, just gave you an example. This is where my experience comes from. Watching these things happen over and over. Different stocks, different cycles, going through thousands of charts to be able to speak on charts with 100% confidence and no hesitation unless the chart is telling you, well, not quite sure, and here we need more information. And if the chart's telling you need more information, what should you do is wait on more information. You don't need no, I knew this was going to happen. No, you didn't. You needed more information. You thought maybe it could happen, but guess what? When you thought maybe it could happen, that's a 50-50 chance. 50-50 chance is any call you make. Okay, let's split a room. Let's go. Half of us say we're going to be bullish. Half of us say we're going to be bearish. Okay, in the next month or 2 months. Guess what? Half of us are going to be geniuses because we called it right. The other half, they were wrong. That half on the next run probably get their run right. But your job is when you do call it right, make some money, participate, understand, you got this run. Next run might not work in your favor. That's what's happened to me. I thought we were going to be bullish. In here, I didn't think that was going to be the fake out. It was. In here, we double top. Now this is where we start to get protective. Down in here, I'm a little bit worried. Because we had this fake out breakout. We need these political events to really become favorable back to the bull side, because now rates are pricing in 0.25. Okay, now we need this other thing to go away, right? And if it doesn't, fake out breakout. You never like to see those signs where they're telling you they're going to buy it up. They're telling you they're going to buy it up, and then when you get there, they say no, we were just joking, we sold into you. Okay, now that's a little bit of a scary red flag. I don't like to see that. So if I look at this right now, I say, listen, we had the breakout in there. We got sold into. Major risk. Be prepared. Major risk. We still have our support in here. We haven't lost that range. That's all. That's really coming down to 4253 in here. When we had this original bounce on that video that I did a couple weeks ago, I thought we would get back into here. That's why I was trying to short it in here. Okay, I was trying to short it in here, and they kept on buying it up. Where I'm like, nah, I'm not too interested in doing this, and then just gonna buy it up, and then maybe they're gonna break it out, and then they sold into it, and then we dropped again, and again, not much has changed. We're just kind of trading zone to zone, and zone to zone trading is garbage. There's not a lot of money to be made. I don't care what anybody says. Yes, you hit this trade, but you also took 3 or 4 other ones that you lost on. Like, that's just the way it is. Unless you're waiting perfectly off of the bottom and you let it develop and you're selling perfectly off of the top. Everything else in between is chop. This is chop, 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 right? That's all it is. So now, what do we look for this week? Keep it very simple. Futures should open up flat tonight. That's what I think is going to happen. Should open flat. I don't know if there's been some new news to come out or anything. And then from flat, we have 2 options. We come down into here, or we go up into here. Those 2 zones. That's it. If we start to see an impulsive move, strong selling, sharp selling, we're going to lose our support. We're going to come down into here. When we come down into here, what's going to happen? Okay, let's just redraw this. How about we do that? What's going to happen is we're going to base in here, and we should be able to come back up into here, and then we'll be working on those 2 new, we'll see where the new resistance is going to be. I'm going to assume that's going to be it, but this is going to be a buy zone. Unless something drastic is happening from a news event, this will end up flushing and then gravitating back into it. I think that's what it will be. But right now, you're just focusing on these 2 zones. 44.11 as your resistance zone. This entire range in here. That's why you see every time we come up in here, we stall. Okay? Because that's our resistance. But you know what? We're weakening that zone from both perspectives. Okay? This zone in here, Look at these touches, right? Look at these touches in here. There's a whole bunch in there, a whole bunch in here. We will weaken the zone. Same thing is happening down in here. It's this violation that we had, right? Look at this. It's just this violation, right? It's all this support in here. Same thing is happening, zone to zone. That's it. Keep it very simple. Once we start losing those ranges, think about the next range. Okay, if we lose this range, bears lose it. Bull range, next one, you target 4466 to 4484. There is good bull trades up into that point. Whatever the name is. Okay, I don't care. What, any name. If they're running, if they're showing you the volume looks good, the momentum is there, and the market's going, they're going. They're going to another zone. Look at their GPs. Look at their resistances. Look at their supply zones that are out there. Find them. If we lose down in here, your individual stock names, they're showing you head and shoulders pattern. They're showing you weekly bear flags, daily bear flags. Guess where they're going? They're going down to their next zone. Stop trading 2-minute candles, 5-minute candles. You look at me and I'm talking about these 2-minute patterns. I'm using those 2-minute patterns to understand that I still think we're going to hold this range. We're going to reject this range. That's what I'm using them for. Okay? Because then, hey, there's an opportunity to catch that pivot in there. Otherwise, just zoom out. Use the hourly 4-hour candles. That's it. Stick to those ranges. Until these zones break out, you don't need to be swinging nothing. Unless you got the nice run in energy stocks. Or something else that's running out there, right? Some other commodity that's running huge and giving you a nice profit. Target down in here. If we break down this week and we are bearish this week, 415 is going to be a short to this range and a bounce from here. Ladies and gentlemen, you got to protect yourself. Long periods of consolidation happen. After that, whether the price was a big drawdown as well, or it was just the time, if it's both, even better. Huge money is made from those points. If you're not ready because you blew up and your mindset's in a terrible place, you will have tons of regret from there. Regret is the worst. It lives with you forever. I have regret on certain names because I didn't buy the big enough option. I could have retired on a couple of my Tesla trades. Retired, like lottery type of money I could have done. I didn't, right? There's regret on those, but it's okay. Because I know I watched them happen over and over. I've seen those patterns happen over and over. So the next time the market gives me something juicy like that, that's my baby pattern. That's the name I trust. Here we go. I'm going to go for this one. And that'll be it. Retire. Some point in the next 5 years. Still do something, of course, related to stocks. But when that opportunity comes, I'll be ready. I don't see that opportunity right now. So what options am I going to buy here? I'm going to put money on an option that I have no conviction. I'm going to do lottos on earnings with big size and just gambling. Right? I'm not a gambler. I'm a gambler, but not that type of gambler. Be patient, people. Be patient. Don't burn out. Relax. Does it feel like it's A+? Does the market say it's A+? If your chart feels like it's A+, but the market's giving you a C- signal, guess what? Your chart's not A+. Unless it's a commodity that's running with commodities. Commodity cycle. Which will boom and bust, just like everything else does at some point. Be prepared. That's it. That's the spiel. I hope you enjoyed the video. It's a long one. If you stuck with it for 48 minutes, you're damn well committed to yourself, into trading, to learning through other people's experiences, to getting your mindset in the right place to be that much better of a trader. Peace out, everybody. I'll see you in 2 weeks. Later.